to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries. As we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990. 800-306-1990 or RonSiegelRadio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me. First, there are no operators standing by. I am it.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. The markets are extremely volatile. We are going to tell you exactly why they're so volatile. There is history for this. I know that the markets are in uncharted waters, but there is history as to why the markets are as volatile as they are, and I will share that scientific data with you. But first of all, we do discuss the idea of today being... Now, here's some fun ones. I mean, today we talk about a lot of things that we celebrate. National Weather Person's Day. Okay. National Shower with a Friend Day.
I got a bad feeling about this.
Yeah, you got to be careful with that one. National Shower with a Friend Day. World Nutella Day. Okay, I better stick with that one. I think it's probably a little bit safer than Shower with a Friend Day. Just saying, just throwing that out there. Dow Jones Industrial Average, it's been a volatile morning. Dow Jones down 184 points as we speak. I watched the early market hours of the pre-market today. The Dow was down over 200 points on the futures at one point in the day. So when we're looking right now, we were actually down, what was it, about 25,260 at one point. We recovered about 67 points there. So we'll just see where the market sell-off goes. Think about this. It is just a temporary glitch. Again, I'm going to talk to you in just a minute about why that's happening, what is happening in the markets. But we do look at the 10-year Treasury. It's fairly flat this morning, not a whole lot to say about the 10-year Treasury. We look at oil down 58 cents per barrel. National average tank of gasoline, $2.60.5 here in the state of confusion. Bring it on. $3.34.4 is the average here in Taxifornia. Yes, indeed, we like to pay as much as we can for gasoline. Let's see if we can vote for another tax increase or another politician that will bring that to us. If you were in America... in Texas, $2.36.1. $2.36.1 is what the Texans are paying on average for a gallon of gasoline, and we are at $3.34, $1 a gallon more in Taxifornia than what they're paying in Texas. Isn't that crazy?
What are you doing?
Yeah, it's ridiculous to me too.
Ridiculous.
Absolutely. So let's continue our move right along, seeing what's going on in the markets. So I told you about the Dow Jones Industrial Average. That one's, it is what it is. The markets have gone up, they've gone down. Housing market, there's a little underlying telltale sign that you need to know about the housing market as well. No one's talking about a couple of these numbers that I am going to share with you this morning. Nobody is talking about them. But let's just look at one of the sets of numbers that we saw this morning, and I'm going to share this little bit of knowledge with you right now. We're looking at the fundamentals of the market. Is this a pullback? Is this a a changing of direction. What's happening in the markets? When we look at the Dow Jones Industrial Average, and you heard me say a little bit earlier about where we're at, how far down it is, that we are at 25,323, down almost 200 points today, down massively on Friday. But think about that. It was only down about 1.5%. Big number, but 1.5%. But let's look at the underlying numbers, right? What drives the market? At some point, it's always going to get back to fundamentals. So the fundamentals are the market. 50% of the S&P 500 companies have reported their earnings already. Out of that 50%, 80% have beat their sales numbers, 75% have beat their earnings numbers, and they're providing much better guidance. The Atlanta Fed is talking about a 5.4% GDP, yet last year we were right around 3%, and for the 8 years before that we never hit 2%. So think about some of these numbers. They are fantastic numbers, and I do have a lot of folks quite frequently say to me, well, President Trump was given a great economy. And with that, I would say, you know something? Maybe we should just say thank you to President Obama. Wasn't it great that he waited until exactly 1 year after he was out of office for his policies to work, and we were finally able to get rid of over 800 regulations 1 year after he was out of office, and we finally see 3% growth and the best unemployment numbers on recorded history for black unemployment, Hispanic unemployment, the best numbers in history. Thank you, President Obama. I'm glad you waited for it to be 1 year after you got out of office for all this to kick in. That was really, really generous of the former president that he would wait that long to make all these things happen and happen on the watch of President Trump. Fantastic. So at least we are in an area, and if you're a fan of our economy, well, the fan of America, you know, it's like we constantly say, and I laugh about this with any president. The Democrats right now are anxious for the president to fail. It's kind of like saying, I want the pilot to fail. Really? Do you really want the pilot to fail? Yeah, it's going to hurt everybody if they do. Same thing with President Obama, same thing with President Trump. A lot of people don't look at the world in that same type of a glass prism. But, you know, that's just kind of where I look at it. You know, thank goodness whatever's doing it is doing it. Did you watch the Super Bowl yesterday? Looks like the numbers were not as good as they had hoped for on the Super Bowl. The attendance or the numbers on the Super Bowl continue, or NFL in general, not really just the Super Bowl. NFL figures continue to slide. We keep seeing where the numbers, the audience, the ratings, not doing well. I guess people are kind of put off by the NFL, and they're not really so quick to forgive. Just a thought right there. So be real careful of if you're an investor in some of these areas, if you're looking at paying up for advertising, you might want to watch what you're doing there. I'm just one individual, one set of numbers, but I did look at the overnight ratings and the decline in another decline in overnight ratings. Super Bowl, 111 million viewers comes after a regular season that saw ratings drop 9.7%. Are people just tired of the NFL, or are they tired of what's going on there? Pretty good game, though. Just a thought for you to share that information. What else is happening in the news? Well, the FISA memo came out on Friday, the Republican version from the Intelligence Committee. So think about this. Shouldn't there just be the version instead of the Republican version, the Democrat version, and all these other versions? Shouldn't it be the version, the right course of action? Isn't that what we want from these committees? But here's the issue. And I might have shared this with you on Thursday, but the protocol for releasing these memos is very simple. The protocol is the committees vote to declassify. The Intelligence Committee can vote to declassify it, then goes to the president, or actually the entire House or the entire Senate can view it. The committees vote, goes to the president. He has 5 days to act or not act. If he does nothing, it gets declassified. If he withholds it or changes it, so be it. Now let's think about this. The members of the committee all read the Republican memo, and over 150 Republicans went to the secure location and took the time to read the 4-page memo. Yet there was only a handful of Democrats that did. Then you get Alan Schiff comes out and says, well, we have our own version of the memo. But he doesn't want to share it with the Republican members of the committee. He doesn't want to share it with the entire House and doesn't want to share it with the president, and says, well, we want ours released as well. Well, follow protocol, Mr. Schiff. It wouldn't be that difficult. You're on the committee. You should have this same knowledge that everybody else does. Unbelievable how these folks continue here. And the president, in a series of tweets, President Trump denounced the news media for focusing on Russia and ignoring just about everything else, especially good economic news. Also claimed that high-ranking FBI officials abused the Bureau to influence the 2016 election and its aftermath. Now, we are upset when Russia tries to meddle, but when our own government tries to meddle, that's okay. Yet it's not being covered on ABC, NBC Nightly News, CBS Nightly News, MSNBC Hee-Haw. The Cannabis News Network is pretty much irrelevant now. Very fascinating. Appearing on Face the Nation on CBS, Republican Congressman Trey Gowdy said that a FISA warrant would have been obtained even without that dossier. In that regard, Gowdy is at odds with President Trump, who believes there would have been no special counsel, no Russia probe without the dossier and the ensuing FISA warrant. So I think Trey Gowdy's doing a good job over there watching what's going on. He's not trying to be that typical partisan, but we'll see what happens there. Trey Gowdy seems, he's retiring from Congress at the end of this term, so it'll be very interesting to see what goes on there. Now that former Deputy Director Andrew McCabe has left the FBI, his replacement, 48-year-old David Bowditch, who is the antithesis of a career-climbing paper pusher. Bowditch was a police officer in New Mexico, a detective, a SWAT team member, an anti-terrorist specialist, and a sniper. Might need to be a sniper out there. May signal a major change after most of the sniping was done by anti-Trump FBI agents on their smartphones. Moving right along, Saeb Erekat, lead negotiator for the Palestinian Authority, is none too pleased with U.S. United Nations Ambassador Nikki Haley. Does that surprise anybody?
Surprise, surprise, surprise.
Nikki Haley criticized the Palestinian Authority President Mahmoud Abbas. Erekat advised her to shut up. Really? Unquote, unquote. The diplomatic dust-up began when Haley denounced Abbas at the United Nations, describing him as an Israel-hating impediment to any prospective peace process. Calling it like it is. Far-rightist opens on migrants in Italy. 28-year-old Lucia Traini, an extremist with a Nazi tattoo on his forehead and draped in the Italian flag, went on a shooting spree yesterday in the Italian city of Macerata. Shot and wounded 6 immigrants from Nigeria, perhaps as an act of revenge after a Nigerian immigrant was arrested for killing and dismembering an 18-year-old Italian girl. Italy divided over what to do with hundreds of thousands of migrants who have reached its shores. Is that a surprise to anybody? Charter Communications is the latest firm to pass on benefits of the tax cut to its workers. The company, which has annual revenue of about $30 billion, will institute a $15 per hour minimum wage across all its operations. Charter is the second largest cable operator in the nation, behind Comcast. CEO Tom Rutledge credited the new tax law, called the move an investment in our workforce and the right thing to do. Moving, there's more news on the Super Bowl. Tom Brady, New England Patriots quarterback Tom Brady, has still received another honor. Actually, this is about the entire season as he winds up his preparation for the Super Bowl. The 40-year-old was named the league's most valuable player for the third time in his career. The only other athlete to win his sports MVP at 40 was baseball's Barry Bonds, and he had a few chemical advantages there, if you know what I mean. We'll continue looking at the news. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, whether you rent or buy, either way you're paying a mortgage, we're going to look at what's happening in the stock market, the mortgage market, the bonds market, how many people no longer qualify for their loan because of what's happened in the bond market recently. We'll talk about it. What is the CVV on a credit card? What do financial advisors... Holy cow, we got a long docket today, so we better get on with it. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, on Twitter, @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Did you know that banks and credit bureaus are rewarded financially if you have bad credit? And the worse your credit score is, the more money they can make off of you? How does that make you feel, knowing that banks are getting rich off of your hard-earned money? How does it make you feel, knowing that if a bank or a credit bureau makes a mistake on your credit report, they benefit from it and it hurts you? The Fair Credit Report Act of 1971 requires banks and credit bureaus to report only accurate information, and nearly 100% of all credit reports are inaccurate. If you're sick and tired of being broke and tired of being robbed by the banks, you owe it to yourself and to your family to call Rondi. Rondi is a FICO-certified credit professional and has helped thousands of people just like you get out of debt and establish great credit. Rondi's number is 855-608-1990. Again, that's 855-608-1990. Or visit creditsanitizer.com. Again, that website is creditsanitizer.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694552.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel radio partners. As one of the heroes, real estate agents will rebate part of their commission. Lending partners will give a credit at closing. The title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. $19.90. The Mortgage Minute today being brought to you by our friends at Gold Star Mortgage. When you're ready for that next house, that next loan, Gold Star is the only one that I know of that has the Fast Pass loan approval. Gold Star Mortgage. Save $10,000 to $50,000 in some instances with that Fast Pass loan approval. So I've been talking to you this morning about the stock market, that it is down significantly. And what is the cause of this big drop in the stock market? Well, there's a few different issues because we know that the fundamentals are good. I'm looking at the markets right now, and they're down 305 points. If you remember when we first started the broadcast this morning, we were down, roughly 185. Now we're down 305, 306, and continuing our drop. And then we look at the bond market, which is the thing I watch the most just because of leading a lending company. What's happening there? So the mortgage bond slightly lower to start the week. It's a quiet news day, some very quiet news week. Getting some important auctions along with mortgage apps, initial jobless claims, and a lot of Fed speak. Speaking of the Fed, Jerome Powell was sworn in this morning and started his first day as the new Fed chairman. There it is. That's the news that most people are not talking about. Each of the last 4 or 5 times when we've had a new Federal Reserve chairman, yes, indeed, that the stock market goes down. Why does the market go down when we get a new Fed chairman? Well, it's called uncertainty. You think you know going into the discussion what's happening and what their bias is, but until they are sworn in, you don't know 100% of what they're going to do. So right now, the markets are a little uncertain. Now, I shared with you in the opening segment, the fundamentals of the market are very strong. We are seeing that there are 50% of the S&P 500 companies reported, 80% beat on their sales, 75% beat on earnings. But here's another number that very few people are watching. How about the housing market? Let's look at this number on the housing market because there is some good news in housing. Think about this. 10 years ago, we had 110 million households in America. Today, we have 120 million households in America. Now, here's the split here. Of the additional 10 million households, 8 million of those households are renters. That's a little odd, isn't it? When you have 8 out of 10 of the new households created are renters. Think about this, 64%. Home ownership is about 64% in our country. Now, if you use that, then we should have had 6 to 7 million buyers or owners, yet we only had 2 million owners. 2 million new households buying houses. Will that change? Well, it has to. It almost always does. History repeats itself. That's why we study history, is to go back and figure out what's happened before that we can predict the future. So if we get that delta where we should have about 6 or 7 million new owners and we only have 2, that's 5 million new households or new homeowners, new people looking for their own house, to buy their house. What does that mean? Increased demand for houses. Now, what's going to end up happening is it's going to force the people to move to an area that they can afford. I sent out a message on Saturday to a lot of folks that I know that are either real estate professionals or out shopping for houses. They need to look at their pre-approvals because their purchasing power is not the same today as it was a week ago. If they were looking at the very top of the market, the absolute most leverage they could get, that leverage has dropped. Why? Well, it drops because the interest rates have increased. Remember, I've been telling you that the mortgage-backed security, that bond, when the bond goes down, interest rates go up. Happens all the time. Well, the bond, again, this morning, it's down 14 basis points. When that happens, that's 0.14%. When that happens, and it happens, it's always the same. When that happens, that means when the bond goes down, interest rates go up. It's just the way the cycle is always going to work. So if that's the case, and that is the case, interest rates have been going up regularly. The longer that continues to happen. Now, generally when the stock market goes down, the bonds go up. The money moves into bonds. Hopefully we'll see that happen again. It doesn't always happen, though. It's been a little bit of a oddity recently. So we like to watch this to see what's happening with these bonds, where they're going. So today, the 30-year fixed-rate bond, the Fannie Mae bond, got down to 100.06. If we look back to January 26th, that bond was as high as 101.60. So it's dropped significantly. When that drops, that's when you're going to see interest rates increasing. And as long as interest rates go up, purchasing power goes down. But let's circle back to those 5 million new households that are going to hit the market if history repeats itself. That's going to increase demand. Yet we already don't have enough supply. What's going to happen? Well, prices will go up with the interest rates going up. That means your purchasing power is going to drop, and the market is going to shift. That's going to it's going to really be a big force on our new buyers are going to find something just a little bit smaller that they were looking at. They might, instead of looking along the coast, they might have to go a little further inland. They might go from the northern part of a county to the Inland Empire. Think about that. You'd have to find the area that you want, but people still believe that home ownership is extremely important. So knowing that the big focus is on home ownership, knowing that we've got 5 or 6 million new households coming to buy if the history repeats itself, just from the new household formation over the last 10 years, demand will increase, prices will increase. Purchasing power, though, is going to decrease a little bit unless we get an increase in wages, which we saw that in the report last week. Wages are going up, so that's the counterbalance to the whole thing. And we did see again, if the Atlanta Fed, their discussion is GDP could hit 5.4%. All of that will be good news, although it's a little bit of inflation, which is not good news, and it'll offset the fact that, and I'm going to share this with you because it was something that I heard and I was screaming at my radio. Do you ever scream at your radio? Just that question. Am I the only one that might scream at their radio? Heading down to go walk, going down to the beach very early on Saturday morning, I'm listening to one of these broadcasts, one of the mortgage companies, and they're talking about the Federal Reserve is selling bonds to reduce their balance sheet. No, they're not. What they said they're going to do is they're not going to reinvest. So as you pay off your mortgage, as somebody sells a house and gets a new mortgage or refinances to do a debt consolidation or to get rid of that home equity line of credit, which is no longer tax deductible, well, the Federal Reserve is not back in the market buying up new bonds. They're just going to let those redeem, and then they're going to cut back on their purchases. Still has a very similar effect that it's going to diminish the demand for bonds, which we are watching for the bond auction later today. But don't let anybody tell you that the Federal Reserve is selling bonds. They are not doing that. It might be a semantic difference, but we like to be accurate on Ron Siegel Radio. You are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. Did you get your Girl Scout cookies yet? We're going to talk about it and how I've got Girl Scout cookies with absolutely no calories. Think about that one. Girl Scout cookies, no calories. Whether you rent or buy, you're going to pay a mortgage anyway, so let's chat about that one. And what do financial advisors do? I'll tell you about that, how to choose them as well. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us. Facebook.com/Ron Siegel Radio, on Twitter, @Ron Siegel. Stay tuned. We'll be back in just a few.
Siegel Lending Team offers you buying power. Let's say you can afford a monthly mortgage payment, including principal and interest, of around $1,900. With today's rate on a 30-year fixed mortgage of 3.75%, APR 3.85%, that payment could support a $416,000 mortgage. But if you wait and rates tick up to around 6.5%, which is roughly the average home mortgage rate over the past 30 years, that same $1,900 mortgage payment, including principal and interest, may only be able to support a $314,000 mortgage. That's over $100,000 worth of home you're missing out on by waiting. That's buying power. All you need to do to get started is reach out to the Siegel Lending Team at 800-306-1990. That's 800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Payment example excludes taxes and insurance. Call us for full details, 800-306-1990. That's 800-306-1990 or SiegelLendingTeam.com. Equal housing lender, licensed under NMLS number 217037.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel Lending Team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel Lending Team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel Lending Team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.
Homeowners that are 62 and older are about to find out a great way to live a better retirement. It's called a reverse mortgage, and SLT can help you learn more. Call the Siegel Lending Team at 800-306-1990 right now to receive your free booklet with no obligation. It answers questions like how a reverse mortgage works, how much you qualify for, the ways to receive your money, and more. When you call the experts at Siegel Lending Team today, you'll learn the benefits of a government-insured reverse mortgage, how it will eliminate your monthly mortgage payments, and give you tax-free cash from the equity in your home. Here's the best part. You still own your home. Now is the best time to take control of your retirement. Call 800-306-1990. That's 800-306-1990 to get your free brochure. Call today or visit our website at SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or simply call 800-306-1990.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990, the real-time real estate segment today. Being brought to you by the area-trusted real estate professionals of Ron Siegel Radio. Text Toolkit to 79564. Find your dream home before someone else does and know exactly what you can afford. There's an affordability worksheet in there. There's a mortgage calculator in there, and you have access to real-time interest rates. The methodologies of getting that are in there as well. Whether you rent or buy, either way, you are paying a mortgage. There are some people who have not purchased homes because they're uncomfortable taking on the obligation of a mortgage. What you need to know is, unless you are living with your parents rent-free, you're paying a mortgage, either yours or your landlord's. As Entrepreneur Magazine, a premier source for small business, explained in their article, 12 practical steps to getting rich. Quote, while renting on a temporary basis isn't terrible, you should most certainly own the roof over your head if you're serious about your finances. It won't make you rich overnight, but by renting, you're paying someone else's mortgage. In effect, you're making someone else rich, unquote. Christina Boyle, Senior Vice President and Head of Single Family Sales and Relationship Management Organization at Freddie Mac, explains Another benefit of securing a mortgage as opposed to paying rent, quote, with a 30-year fixed-rate mortgage, you'll have the certainty and stability of knowing what your mortgage payment will be for the next 30 years, unlike rents, which will continue to rise over the next 3 decades, unquote. As an owner, your mortgage payment is a form of forced savings, which allows you to build equity in your home that you can tap into later in life. As a renter, you guarantee that the landlord is the person building that equity. Interest rates are still at near historic lows, making it one of the best times to secure a mortgage and make a move into your dream home. Freddie Mac's latest report shows that rates across the country were at 4.22% last week. The bottom line, whether you're looking for a primary residence for the first time or are considering a vacation home, now may be the best time to buy. Give us a call at 800-306-1990, 800-306-1990. I would be happy to put you in touch with a great real estate professional in your area, and I'll get you that ultimate home finance toolkit whenever you're ready for it. All you need to do is text toolkit to 79564. Text toolkit to 79564, and we will get that for you. What do financial advisors do is the question today. So if you're earning and growing a financial worth, you might be considering whether you need a financial advisor to make the best money decisions. Although the financial advisor term is bandied about quite a bit, there's a wide range of certifications and job responsibilities for financial advisors. Let's chat about that a little bit and the differences between various financial advisors, how they're compensated, and whether you need a financial advisor or not. Financial advisors provide a laundry list of services and serve a range of clientele. A financial advisor can create a comprehensive financial plan, answer a simple question about IRA withdrawals, and everything in between. The initial interview with a financial advisor. So they typically begin by meeting with you either in person or via video call. The advisor interviews you to determine your current financial situation and goals. The initial meeting might cover topics such as your salary, your assets, insurance, expected easy for me to say, expected inheritances, other income sources, your debts, liabilities, tax situation, and more. Financial advisors work with a range of clients from those with small amounts of money to those with millions of dollars. A good financial advisor gets to know you as a person along with your future goals. The advisor explores your family situation by asking questions like, are you married? Do you have children? So, are you seeking to save for a down payment for a home? Are you looking to buy a second home? Do you want to fund your child's educations? Or are you hoping to travel the world? They need to know what you want in order to be a good advisor for you. How do they get paid? They need to answer that question. You need to ask it if they don't answer it. You need to be wary if they're avoiding it. There are a variety of compensation methods for financial advisors. Some advisors get paid a percentage of your assets under management for managing your money. So they might get paid 2% of your assets. You have $100, they get paid $2. Next year, if you have $200, you did great. They get a raise. Now they're getting $4. Still the same 2%, but they're make more money when you make more money. Financial advisors can get paid by commission. In this case, when an advisor sells you a financial product, he or she receives a specific percentage from the company that's providing that product. It's like an insurance policy. Financial advisor might get 4 or 5% for selling you an insurance, or for a life insurance, or an annuity, or a mortgage insurance, a mortgage loan insurance, not the mortgage insurance premium, but a mortgage loan insurance. Those usually are a term that decline over the 30-year life of your loan. Financial advisors get paid with a fee-for-service model. If you want a basic financial plan, you might pay a fee to have the financial advisor create that plan for you. Some financial consultants who work for large brokerage firms like Schwab, Fidelity, TD Ameritrade offer basic financial advice and are paid by a salary by their employer. Typically, these financial pros handle more superficial financial concerns. If they're getting paid a salary, there's pros and cons to all of it. But generally, if you're getting paid a salary, you have to wonder, the top financial advisors, the most significant, educated, they're getting paid some sort of a commission. And don't think commission's bad. What's all that's really should be important to you is how are you doing? After all the costs, after all the expenses, what's the bottom line for you and your family? That's the important part. If they make, the biggest financial advisors, believe it or not, hedge fund managers are a form of a financial advisor, right? They charge their clients a 20% commission, but their clients are making boatloads of money, so they're happy with that. Think about that concept. And the only ones that put money into hedge funds, for the most part, that's going to be your $5 and $10 million accounts. So the biggest investors are willing to pay the highest commission, but they want results. So that's why they're paying that. What are financial advisors' qualifications and credentials? That's another big question. This is where the financial advisor field gets complicated. There aren't one or two credentials for financial advisor. In fact, there are many financial advisor credentials. Let's talk about some of those. Financial advisors who sell investment or insurance products need to be licensed. If personal financial advisors directly buy or sell stocks, bonds, insurance products, or give financial advice, they need specific licenses related to those products. The Financial Industry Regulatory Authority, that's FINRA, oversees security sales requirements. The most popular security sales licenses include Series 6 and Series 7 designations. A Series 6 license allows a financial advisor to sell investment products such as mutual funds, variable annuities, unit investment trusts, and some insurance products. The Series 7 license, or general security license, allows an advisor to sell most types of securities from common and preferred stocks, bonds, options, packaged investments, and more. Series 7 holders can't sell futures, real estate, or life insurance. They cannot sell futures, real estate, or life insurance. Beyond the securities sales license are two of the most popular financial advisory designations. CFP, which is the Certified Financial Planner, and CFA, which is the Chartered Financial Analyst. A CFP is licensed by the CFP board in a process that involves completing academic coursework, passing the certification exam, completing work experience, and more. A CFA is a high-level investment management designation and includes 3 levels of study and examination. A CFA professional provides advanced investment analysis and portfolio management. Beyond these gold standard financial advisor certifications are titles such as Certified Fund Specialist, Chartered Financial Consultant, Chartered Investment Counselor, Certified See, there's a whole lot of these things. Certified Public Accountant, Personal Financial Specialist. Each of these designations require varying levels of education and experience. We'll talk about the job responsibilities when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. We're going to also talk a little bit about the CVV card on your credit card. What is it? How do you protect it? We'll talk about that and more. You can reach us anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio, on Twitter, @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area-trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Most businesses struggle to get the online reviews they need to get a competitive edge over their competition.
Rex is a brand new technology that uses text messages to direct happy clients to your online review sites, Zillow, Google, Facebook, and Yelp, and unhappy clients to a private survey, so businesses can win more customers. Try Rex today by going to www.meetrex.com.
Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed-rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or 1-800-T90. Rate subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
Do you have a goal of mortgage-free home ownership? What if your home was valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year? The mortgage planners at the Siegel Lending Team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call the Ron Siegel team at 1-800-306-1990. That is 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you a no-obligation real estate plan. You be the judge if this is right for your family. Again, all you have to do is send a team a copy of your mortgage statement by email to reap@ronsiegelradio.com or call today. Ron Siegel, 1-800-306-1990. That is 1-800-306-1990.
Rate subject to change and without notice. Licensed by the California DOC and BRENMLS 217037 and 145502 and Cal BRE 01869452 and 1866775.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. In the Your Credit Matters segment today, being brought to you by CreditSanitizer.com. You have a credit report. It is wrong. What are you doing about it? Credit Sanitizer has the solutions for you. All you need to do is go on their website, fill out that site, fill out the little form there, and we're going to send you an update with some credit tools and tips every week or so. Maybe every once in a while, if we find something that comes up that's even more important or more timely, we might get that to you a little bit sooner. But that's get that set up right away. What is the CVV on the back of your credit card? What is the CVV on your credit card? If you made a purchase online or over the phone, you're probably familiar with the 3 sets of credit card numbers you've had to hand over. These numbers include the credit card number, the expiration date, and the CVV. If you're an online shopping pro, you'll know where to find the CVV, but what exactly is that CVV on your credit card? Credit card CVV acts as another line of security against fraud. The CVV, or card verification value, can also be referred to as the CSE, or card security code. These numbers serve as one of the most important anti-fraud measures for a credit or debit card, especially with the rise of virtual transactions. So when you make a purchase online or over the phone, giving the CVV assures a merchant that the purchase is legitimate and authorized. When you use your card in person, retailers can check your ID to make sure you're the cardholder. But merchants can't do the same when you make an online purchase. Instead, the CVV serves a substitute for personal identification. Plus, your card carrier can verify your card's unique CVV in the event verification is needed. Not all merchants require you to enter your CVV when making a purchase. This doesn't make the merchant illegitimate. However, in any case, you'll always want to make sure you're handing over your credit card information to a merchant you trust. Where do you find your card CVV? Card carriers print their CVVs in different places on the cards, so it's important to know where that CVV is on your card. If you have a Visa, MasterCard, Discover card, you can find the 3-digit CVV on the back of the card to the right of the signature strip. The number also may be adjacent to either your full credit card number or just the last 4 digits of the card number. However, if you have an American Express card, you can find the CVV on the front right side of your card. Also note that Amex calls this number a card identification number, CID. And Amex CID is also 4 digits instead of 3. How a CVV protects you. The card CVV comes in handy mostly for online purchases. Again, it acts as another line of defense against fraud. So even if a hacker gains access to your credit card number, expiration date, and full name, they still need that CVV to complete the transaction. Luckily, CVVs aren't as easily obtainable as your other credit card information. This is due to the payment card industry's data security standard. This was created by Amex, Discover, MasterCard, Visa, and other credit card leaders to establish standard rules for credit card information storage. One of its main stipulations states that merchants cannot store your CVV after you make a purchase. However, there's nothing preventing merchants from storing the rest of your card's information, like the credit card number. This makes it harder for criminals to find the CVV attached to your credit card number. The CVV also works in tandem with a credit card's magnetic strip and the newer EMV chip technology. The printed CVV on your card is embedded in the card's magnetic strip. The chip has a signal as a digital CVV equivalent called the Integrated Chip Card Verification, ICVV. So when you use your card in person, whether you swipe or insert the chip, your CVV is still being confirmed. So what are the limitations? Typically, the issues that arise with the CVVs are often inflicted by the cardholder, since it's hard for fraudsters to obtain your CVV through a credit card database. They turn to other legal means. This includes phishing and physically stealing your card, so be careful. Final word, while in-person purchases aren't entirely foolproof, online transactions put you and your information more at risk of fraud. To combat this, credit card providers created the CVVs and their associated regulations to help keep your information safe. Isn't that special? That's the Your Credit Matters segment. Again, brought to you by CreditSanitizer.com. You have a credit report. It is wrong. Credit Sanitizer is there to assist. So we've been chatting about what do financial advisors do. Now we want to talk about their responsibilities. So lumping the financial advisor's duties together is like suggesting that an anesthesiologist and a dermatologist perform the same work because they're both doctors. Financial planners might focus on one aspect of your financial picture or be generalists. So here are some of the duties: financial planning, insurance planning, risk management, employee benefits planning, tax planning, retirement planning, real estate planning, debt management, emergency funds, legacy, small business. There is a lot to it. Most financial advisors meet with you to discuss your financial goals. That's why we do some of these seminars with our friend Todd Halterman, who's providing 6%, don't tell him I told you that was 20% last year, on a very, very safe, secure investment. 6% to 20%, safe and secure. You can't say guaranteed because it's not a treasury, but no market volatility risk. Think about that. We're going to be doing another conversation, I think 2 weeks. Todd's going to be here to chat with select individuals who qualify for these programs. So where and how does a financial advisor work? Sometimes they're in a small office, sometimes they're in a big office, sometimes they work for the big wirehouses, the Merrill Lynches, the JP Morgans of the world. Do you need a financial advisor? Well, it depends upon the size of your financial assets and your comfort with money management topics. Most people think they're great at financial management until you start asking them some questions. And then you realize that, you know something? There's a big difference between a bull market. Think about this. Right after President Obama was elected, the market took a big drop down to about 6,700. Today, the market's around 25,000. There's a big difference between a bull market, or being a great stock picker, and a bear market, a market that's going up like crazy. Big difference. In those bull markets, you can throw a dart at the stock page. We don't even have them anymore. But you can basically close your eyes and pick a stock, and they're going to go up. Don't say that to the owners of General Electric. But the idea here is that there's a big difference between that and having a plan. See, the great planners about 1,000 points ago on the Dow Jones were talking to their clients about taking a little bit of money off the table. Not a lot. You want to still have that market exposure, but you need to take a little bit of money off the table every now and then, just so that when you get the market takes a big pullback, the 1,000 points that it's done recently, well, you've got bullets in the chamber to go and buy. Take advantage of these market dips. That's what great financial planners will do for you. Now, the other part of planning I'm going to tell you about is our triple play. It's the Ron Siegel Radio triple play going on right now. Buying those Girl Scout cookies. We've got our Troop 2908 that we're going to buy a bunch of Girl Scout cookies. I want to get 1,000 boxes of Girl Scout cookies. $5 a box. Help me out here. I need to get our listeners to contribute, and we're going to try and buy 1,000 boxes. We're going to take those Girl Scout cookies to the Orange County Family Justice Center. That's where the abused women and children are protected. We want to take them over there. The third part of the triple play, there are no calories when you go through Girl Scout cookies this way, because the troop is going to take, the Girl Scouts are going to take them right over to the Justice Center. You don't have to be involved. You won't gain any weight from the process, and you're going to be helping out the Girl Scouts and the battered women and children over there. And be sure to set that first radio preset button to come back here every day to join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to John, who's engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990. 800-306-1990 or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
Times that I tried to swim against